Hey, how's it going, guys? This is Bennie Childs, founder of the Teach Me to Fish FX trading community, and I'm back with this week's free market forecast for the week of February 27th, 2022. All right, guys, let's go ahead and get right into it. We are here on the 4-hour chart. As always, I already have our short-term institutional bias set here. Green is long, red is short, orange is consolidation. And if you would like to know how it is that I find the short-term institutional bias, then feel free to click on the join button on the YouTube channel and sign up for the professional trader mentorship. All right, guys, let's go ahead and get in it. So let's start with the dollar index, the US dollar index. Institutional bias is long. Let's take a look here. Let's see what type of market structure we have. We are on an uptrend. On the 4-hour, we do have higher highs and higher lows. Let's take a look at a more zoomed in price action. We do see where we've had this high to be taken out. Let's take off this magnet, but we do see where this high here has been taken out. Maybe if I do it this way, bam, let's grab that. Let's make that a swing high. All right, so this swing high has been taken out, as well as this swing high that has been taken out. So with the swing highs that were taken out, this lets us know that we had some pretty strong swing lows here. All right, so this swing low was so strong that it took out this high. This swing low was so strong that it created this high, so on and so forth. So we are looking for an uptrend. What I have marked here is some unmitigated institutional zones. All right, and if you're again wanting to know how I come up with the institutional zones, then feel free to click on to join the professional trader mentorship, and you can grab some videos and things of that nature. All right, so institutional bias is long, so let's see if we can find some reasons for the dollar index to go long based off of the 4-hour time frame. We do see here, guys, we do have an unmitigated 4-hour demand zone right here. All right, let's change this over to demand. We do see a 4-hour unmitigated demand zone, as well as we have a ton of imbalance that needs to be filled. So that does give us reason for this pair to come back. However, it does not necessarily mean that it has to come back to fill in the gap or to mitigate this 4-hour demand zone. But again, it definitely gives us reason and a pretty good area to take the dollar index long based off of the short-term institutional bias. So if you want, I would say look to take trades off of this 4-hour zone right here. I'm just trying to get the 50% of that zone. There we go. All right, and we'll go just past the zone, and you can aim for at least a 4-to-4, a Forex risk to reward, if you will. If the market continues to push down and not fill in this gap, we might want to look to take profit here at a 7.64 X or 7.64 risk to reward on this trade, or we could target the highs. So whichever you want to target, that is what you can target. But keep in mind that it's very likely for this pair to even possibly come down and touch the bottom of this 4-hour zone, it can come back and retest more into this institutional zone before heading back up. So keep in mind, and that's why it's just good to have a confirmation plan in place, which I have a confirmation plan in place. Basically, there's certain price action that I will be looking for once price gets in this area before actually considering the trade. So this trade here that I have placed here, this is more so like your optimal trade, and so it could be a little less, could be a little more after the actual price action plays out. All right, let's go ahead and move on to the Aussie USD. Now, Aussie USD, the institutional bias that I have here is consolidation, simply because both the Aussie dollar and the US dollar or they both have long institutional bias on the short term. So we do see where the Aussie dollar is kind of sitting in institutional supply here. So we also have an unmitigated institutional demand down here. So it's very possible that we could see this pair bouncing in between here. So let's just see where we may want to possibly take our trades at. So based on the 4-hour time frame, we do have an unmitigated supply zone here. All right, let's go with supply. All right, so we do have an unmitigated supply zone here, as well as imbalance that could be filled. So it's very possible that, you know, because we're sitting in institutional supply, this pair may come up and respect this 4-hour zone and before heading down. We do have 4-hour imbalance that needs to be filled right here. So let's say if this pair does come back up and respect this 4-hour supply zone, all right, looking to take the trade at the 50%, all right, and maybe target this imbalance if it has not already been filled. If this imbalance does get filled and there isn't any more imbalance made, then possibly yes, I would target this low. But for the onset, looking for a short for Aussie USD, I would be looking to take it from this 4-hour supply right here. Now let's see if we can find some long positions that we can take. We do have a 4-hour unmitigated. We do have a 4-hour unmitigated demand zone that I'm noticing right here. All right, we can take that. Switch this over to demand. All right, now we do have some other zones here, but they have been mitigated. All right, price has already come back. For instance, in this zone right here, price has already come back, filled some orders and shot back up. This zone right here, price has already come back, not once but twice, and shot up. So these zones have already been mitigated. This zone has already been mitigated as well, because if I draw this out and show you guys, all right, price created this zone, came out, came back and tapped the zone. So this is unmitigated. All right, or this has been mitigated. Now again, just because a zone has been mitigated, that does not necessarily mean that the zone will not hold up. However, on a probability case, if a zone has not been mitigated, you have a better chance of catching a trade from that zone. And so that's why I'm looking here. Okay, so if price does come down to this area, of course, I'm always looking to take the trade at the 50% of the zone. All right, that's my optimal. Okay, now it could come right here to the proximal line, tap right here at the proximal line, and then shoot up again. However, I'm always looking for it to come and tap into the 50% because you get a better risk to reward. Now, what would I target? Okay, simply the same thing that I always target. We would have to wait for price action to play out and to see if there are any imbalances left. So I would target those imbalances. If there aren't any imbalance left, then I would target the highs for a long trade. All right, so basically with this trade, we pretty much would have our zone set up. I would put an alert once price comes and taps this proximal line. My alert will go off here. Let me show you guys exactly how it is that I do, because I'm not at my computer all the time. All right, we don't want to do that all day. So I right click and I would do crossing down every time. All right, just because I'm out and about, I may forget about the alert. And then I would do 4-hour demand, like 4HD or something like that. So I'll know that, oh, okay, I'm coming down. It's tapping into a 4-hour demand, and now I can analyze and see what the current or the most recent price action has done. And so now I can set up my targets. So you guys may want to do that, or you can simply just initially what I typically do whenever I send out these areas of interest, which we use a different strategy in our mentorship program. I'm always looking for a 4-to-1. All right, you can be pretty profitable doing a 4-to-1 with the reward or a Forex trade. All right, and I'm not saying Forex like foreign exchange, but the number 4x, like a 4 times your risk trade. So we could simply set it up just like this. All right. So again, these are the 2 trades that I would be looking for. I have a long and a short, because the short-term institutional bias is consolidation here. Okay, so just looking to play off of those zones, and that's one thing I love about trading supply and demand is you can literally still make money inside of a consolidating market. All right, pound USD. All right, short-term institutional bias is short because the pound is short and the USD is long. All right, so now I'm looking for reasons as to why I want to take this trade short. So if I come and I see I do have a swing high here, all right, just because here, let me back up a little bit. Price has already made this push down. All right, with any push there is always a retracement. All right, so if we come to our most recent swing high, go down to our most recent swing low, let me switch this over to my fib trading. All right, you guys know, should know by now, but if you don't, I really love the 78.6% retracement, because that is a great discount. All right, premium area. Okay, notice I don't have anything lower than 50%, because in the market, when you're trading, you really get better pricing 50% and above, but I would love that 78%. All right, so now price has pushed down, right, and created this institutional supply area right here. Again, we're looking for the pound to go short. Let's see if we can find some reasons why the pound would go short. All right, I do see a unmitigated 4-hour supply right here. All right, I'm going to take that as my zone, put it in supply. And what else do we have, guys? We have imbalance sitting right here. Okay, let's go ahead and select our imbalance. All right, so price could definitely come back to fill this gap and tap into this supply zone right here. Now we do have this doji right here, and I typically take the entire candle for my doji zones. However, I'm gonna sit right here just because this zone is basically engulfing this doji zone. So where would I be looking to take trades from? Of course, the 50% of this 4-hour zone. Okay, and we actually would go down and try to refine this a little bit more in the mentorship program. But initially starting out, again, we'll set this like this, and we can set it at a 4x trade. All right, or close to it. All right, initially starting out, you can probably take partial profits there, or again, if the market continues to go up, we can target this low or even target this proximal line of this unmitigated institutional zone that I have here. All right, so again, I'm gonna set it at a Forex trade for right now, and again, we could right click, add an alert. I want to catch it crossing up every time, and I actually need to separate. So let's go 4 hour free market analysis. That's just too much. I'll just do 4 hour supply zone. All right, we'll just do it. We'll just do it like that. I typically like to separate my alerts to separate what I'm doing for you guys and my personal trades. But so price will come in, tap this 4 hour proximal line right here. I'll get the alert, look and wait for my confirming price action and see what the market has created as far as imbalance or lows for me to target. Okay. So again, I like this. This zone is definitely in a premium area. All right, it's past the 78.6. All right, it is unmitigated, and again, hopefully the market will have some orders sitting here, some sell orders to be traded. All right, let's go ahead and move on to USDCAD. USDCAD institutional bias, short-term institutional bias is long. Why? Because the US dollar is long and the Canadian dollar is short. Okay, so let's see if we can find some reason as to why this market could go long. All right, one reason is we are sitting in this 4 hour demand zone. All right, so technically it has come in and it has been mitigated, but it has not yet made a move out. So this could be the area in which the market would push up. Okay, we do have a 4 hour unmitigated zone here, unmitigated demand zone. All right, sitting right here where price could come back to push up. We have several different unmitigated 4 hour zones that we could definitely see the market come back to. Okay, and let me just draw these in and we'll see if we can make sense of these. All right, as well as imbalance to be filled. Okay, imbalance to be filled there. This imbalance looks, yeah, this imbalance has already been filled. All right, so it's very possible price could come back to this area, or it could push out from here. All right, it could push out from here and keep going down. On a 4 hour structure, we do see where higher highs and higher lows have been made. All right, this low produced a higher high that did close above this high. So yes, I do think that this pair is going long. All right, we do have liquidity. All right, I'm sure we have liquidity resting here. All right, below this low, I'm sure someone has taken, or some traders have taken buys here with their stops sitting here, that the market could very well come back to take out and then bounce off of this zone right here. I mean, we have liquidity here. Okay. different areas we have liquidity at here that this market could drop down to. It's just some great buy trade setups here with liquidity, imbalance, and 4-hour zones. Where would we likely see price shoot up from? At this point, what I would do is probably just take my Fibonacci, go from the most recent swing low to the most recent highest of high, throw the fib on. Again, I love the 78%. Doesn't mean that it has to come back here, but let's see, 78% is sitting inside of imbalance right here, just above a demand zone. So maybe we see this imbalance filled, this liquidity taken out, and maybe a push off of this zone. All right, so that is going to be my preferred area to take a trade from. So let me just put this basically off of the 50%. This is just me personally. All right, and maybe target this high. All right, maybe make this a 17x trade, and maybe take partial profits at imbalance that is created here. All right, so what we do is we go to the proximal line, right click, add alert, crossing down every time for our demand zone. All right, so maybe take that trade there. Okay. All right, let's take a look at the EURUSD institutional short-term institutional bias is consolidation. All right, it has currently been on a downtrend. However, it is tapping this institutional demand zone right here. Let's see if these highs have been taken out or anything. All right, this high has not been closed above, so this has basically been just a nice little liquidity grab. We can see this low has not been strong enough to create a higher high, if you will. Yes, we've had liquidity grabs, but no, it did not close above here. All right, so we got a sweep of the lows right here, barely tapping this institutional demand. All right, so consolidation, let's see, maybe we could possibly look to see this unmitigated 4-hour supply zone to be tapped into, okay, as well as this imbalance here to be filled. Switch this over to imbalance. Okay, maybe we see a continued push down to go further into this institutional zone here. Okay, where could we take this long? Let's see. Price is already kind of sitting in here. So these have already been mitigated except for, let's see, this 4-hour demand here has not been mitigated as of yet. And what I would do is actually take it from this low. Yeah, if we take it from the high of that doji, we can see where price has already tapped into it. And I typically like to take the whole of a doji. All right, so let's just move this down to here. Okay, can't really slide it over, but here, let's just recreate it. So we may get this here. We probably making look into this, probably shooting up from here. Now we do have some other, let's see. this has already been tapped into. So I like this better because again, it has not been tapped into. So I would probably be looking for a long from there. This one has already been tapped into. This imbalance has been filled. So yes, maybe looking for longs down in this area. Okay, and again, it's not to say that you can't find longs going into another area, but I just like this one for higher probability, if you will. Price would need to fill out a little bit, so I'll just set this at a Forex trade. Let's go ahead and set an alert at the proximal line for this 4-hour demand crossing down every time. 4-hour demand zone. All right, so we can see that. We can also see this come into play for us. I'm sorry, I'm trying to get right on it. All right, I'm rushing a little bit here, guys. We're gonna take the family out to a nice little park. So we'll initially set this at a Forex trade as well. Okay, and let's go ahead and set up our alert for that proximal line every time crossing up. All right, I'm gonna put caps lock on 4-hour supply zone. All right. USDJPY moving on. Oh, let me go back so you guys see that zone there. All right, so that's what we're looking for, these two areas to play off of. All right, USDJPY, short-term institutional bias is consolidation. We are sitting in institutional demand, or excuse me, institutional supply. Let's see if we can find some reason for this to push down. We do have an unmitigated 4-hour demand zone right here. Excuse me, not demand, supply. My apologies. We have a 4-hour unmitigated supply zone sitting right here that we could definitely see price shoot down. All right, and target. I do see imbalance here. All right, that has not been filled, so let's just go right above there. Maybe initially targeting this imbalance for a 5x trade, or maybe this imbalance if price has not come in to fill it first and then push up. Okay, so we could see that. Now, what would be a reason to see that we could see price go up? We do have an unmitigated 4-hour demand zone right here, right? That we could see price bounce off of. That's a pretty big demand zone. So I would definitely be looking to refine this zone and not taking it off of the 4-hour. But if you want to do what we call set and forget trades in the game, we can do that. And then, you know, we can do a Forex. Try to aim for Forex. Slide this over. Okay. All right. I mean, Forex would take us back into past this supply zone right here. Okay. If I can just get it. I'm sorry, guys. A little OCD here. Been a little anal. All right. So we could possibly look to see taking that trade there. And again, it just really depends on how price action plays out. So we'll add an alert crossing up every time for our supply zone. Okay, and crossing down every time for our demand zone. Okay. All right. So maybe we could be looking into those trades. This has been mitigated and imbalance has been filled. Price left and came back and mitigated that. Let's see, we could possibly take this 4 hour. All right, that has been unmitigated. Okay, we do have that as a possible trade. So maybe, you know, watching out for this zone right here. Okay, decent size zone. And maybe be looking for a Forex trade on this one as well. Okay, so price could come there. Kind of backwards here, but let's take a look at 4 hour structure. Again, it has been on an uptrend. However, this low failed to make a high that actually closed above it. So again, I'm thinking my bias would be this sell right here on USDJPY to catch that trade. Now, unless this low here takes out this high, we actually get a candle to close above, then yes, I'll be looking to take this long, and again, of course, take a look at price action to see what it is that we have there. All right, so USDJPY, again, the short-term institutional bias that I have is consolidation. I have my areas where I would look for confirmation price action to take my trades and possibly get let's see, this is almost a 10x trade. This is a 4x. This is a 4x. All right, USD Swiss, moving right along here. Institutional bias is long. We are currently on an uptrend leg. All right, let's take a look here. This low did take out this high and created a new high. All right, this low was created. It did not create a new high. All right, but it gave us a lower high. Then now we have a lower low here. I still wouldn't quite say that this is in a downtrend. All right, we could see another higher low be created. All right, and pushed up here. We do probably have resting liquidity here that has yet to be taken out, that could be taken out. We have an unmitigated 4 hour demand zone right here with imbalance sitting on top of it. So I really love that setup. Always love those setups when I have zones resting behind, if you will, imbalance. So let's see, so maybe if the institutional bias is correct, short-term institutional bias, we could see a long from here. We do have an unmitigated 4 hour demand here, okay, that we could see price coming from, and I'm sure if we threw our Fibonacci here to here, we'll see that. Oh, I like this. The 78.6% is sitting here, but we do have liquidity right here. This imbalance has not been filled. We still have a little bit of imbalance that needs to be filled, so we could definitely see price come down in this area. So I'm going to go for, not my favorite Fibonacci level, but I'm gonna go for this zone right here and go just outside, and I would target the first TP of the Fibonacci. All right, and maybe look to take partials at a 4x. All right, again, it doesn't mean that price is going to come down all the way down to this area, but again, it's just, for me, it's just more probable to see price come down and take this trade here. All right. Now again, we do have confluence here at the 78.6. We have a unmitigated demand zone as well as imbalance that needs to be filled. And as a matter of fact, again, we have just a small amount of imbalance to be filled here as well. So again, I would love to see this pull down here, but again, we could take a trade off of this zone right here. But I'm gonna take this one just for a higher risk to reward, crossing down. Here we go, 4 hour. I don't know why caps keeps jumping off, but 4 hour demand zone. So maybe look for price from there, or to take a long from there, or for price to come into here and go long. Okay. Now we do have yeah, this institutional zone has been mitigated, but again, it could come down and mitigate again. It could be more orders here, so you guys just wait for confirmation. Okay. And if it does take off from here, we can always wait for a pullback to take a trade up. All right. USD Mexican peso. All right. Short-term institutional bias I have is consolidation. We are sitting inside of this institutional supply. This has been mitigated just simply because we have the open here. Price obviously came in and shot down. Open here, price obviously came up and shot down as well. So that has been mitigated. Doesn't mean that price won't go back and catch some more orders. But I would probably be looking for probably more so a buy, and a buy from this unmitigated 4 hour, all right, which has imbalance resting above it. 50% of it has been traded, but it has not been filled quite yet. Let's see, can we possibly go anywhere else? Yeah, see, that's been mitigated, that's been mitigated, that's been mitigated, but this institutional demand zone has not been mitigated. So it's very possible we could see price come down to this institutional demand and then push up. Okay, if the short-term institutional bias holds up. All right. But initially, I would say I really don't see a reason for price to even come back up. Not to say that it can't, but I don't see a reason other than maybe to come out and clear some of this liquidity here. Like, so there's liquidity here, liquidity resting here. That's liquidity. Okay, we have. So yeah, we definitely have we have some reasons, but not as far as orders to be filled, but liquidity being taken out that we could possibly see. We possibly could see there. Put that as a high. We also have liquidity here. Okay. All right. So we could. We could see it play back here for the liquidity, but not for actual zoned orders. Okay, so I will be looking for maybe taking this trade here if it gives me my confirmation pattern. It hasn't quite yet been filled, so maybe target the 5x. Definitely have the Forex risk to reward in mind. So we're gonna catch this crossing down 4 hour. I don't know why it keeps doing that 4 hour demand. zone. Okay, so maybe take that trade going up. Now NZDUSD, all right, short-term institutional bias is long coming in. However, we have been on this downtrend. Okay, this low fell to create a higher high because of this institutional supply. All right, we've taken out liquidity here, taken out this 4-hour demand here. Okay, taking out this 4-hour demand and actually barely tapped into this unmitigated 4-hour demand zone right here. All right, so maybe we could see it come down to this area and go long. We do have other unmitigated 4-hour demand that we could see played out here. Let's do this. Maybe take that. So we can definitely see a reason for the NZD/USD to come down and to push price up. All right, let's just maybe throw on our Fibonacci and find a premium zone. What I'm looking for is here. All right, 78.6% here. Maybe we could see it come down here. All right, go ahead and take out this zone. This is not a very strong zone because the zone was created. Then we've had some bullish candles. Then we had this doji bearish candle, bullish candle. So it's not a very strong zone to begin with. So maybe we could see price shoot from here or even come down near to this area. Maybe I would say initially looking for price to play off of this zone just because of a better risk to reward. This is pretty strong. We've had nothing but bullish candles push off from this zone. Initially, we could again just target a Forex trade, all right, to be profitable for the week, or again we could target these highs since our institutional bias for NZD/USD is long. So maybe, you know, looking for the NZD/USD to make another higher high if it continues to come down before pushing up. All right, let's jump over to crypto. Let's take a look at Bitcoin. Bitcoin, the short-term institutional bias is short. All right, you guys can see that we've been on this downtrending leg. We have had some closure above this high, filling in, barely filling in this imbalance. All right, let's see, what reasons could we see this price going lower? We do have an unmitigated demand zone. We could see price push down lower. This is a mitigated demand zone. We have imbalance inside of this demand zone, so we could definitely see it pushing lower. It is barely coming off of, let's see if I can make this a little bigger for you guys. We do have imbalance here that has barely been filled here. If not, I mean, it's probably only 1 pip, maybe half of a pip, so they may not even think about that. Maybe we could come up into and fill this imbalance here. We could possibly see that. Let's see, as far as our zone. Oh guys, I'm so sorry. I meant to share with you guys some information. I'll do it towards the end of the video. Let's see. We've had. Let's see. Has this been unmitigated? I would count this as unmitigated, guys. So maybe we could see it push up to here. Okay. All right. And the reason why I'm saying I think this is unmitigated because price left the zone and has yet to come back here. So maybe we could definitely see price come up and then come down from this 4-hour supply. Okay, let's just target Forex. Okay, see price come in, fill this imbalance, tap into this 4-hour supply, pick up some orders. All right, we do have liquidity resting above here. All right, that we could definitely see it come into and just manipulate the buy side, taking this liquidity and then shooting down. So it could definitely invalidate this zone, take this liquidity here, and then push down again. All right. I'm not even gonna say price is funny like that, but the quote-unquote market makers are funny like that. All right. Taking out those stops and then pushing down. Okay, since we are in bearish, since we do have bearish institutional bias, I'll shoot for that low if a new low has not been created, and maybe come and put our stop above this liquidity right here. All right, which, you know, it's not the best risk to reward. I mean, it's a pretty big stop loss. Talking over 2,000 pips. So definitely look for confirmation on this one. But this is what I would be looking for Bitcoin if I were to trade it. Because of the institutional short bias. All right, let's take a look at gold. Institutional bias for gold is consolidation. Okay, let's see. Just really simple, guys. We do have an unmitigated 4-hour that we could 4-hour supply zone that we could see price come down off of. We do have imbalance to be filled here, so I definitely like the possibility of this short here on gold. Okay, just above the zone. All right, initially we'll target 4x on that, maybe, you know, target these actual lows to go ahead and end the trade. Let's see, we're consolidating, so we do have imbalance to be filled here. Really no unmitigated demand zone until we get down here. But in all actuality, really don't see price coming back here. And you have to be careful, guys, because you have to watch these candles, because this could still be considered a mitigation, because we have the open here and then a small wick to the bottom side, mitigating that zone and then pushing up. But I am going to set this as a 4-hour zone. All right. And we go demand. All right. So we could possibly see a long coming from here for Bitcoin. We do have that demand zone as well as imbalance that needs to be filled, that we could definitely see price come off of here. All right, I hope I'm helping some of you guys understand the market as well as my analysis. Let me know if you're not, and I'll do my best to try for this free video. All right, initially targeting 4x for that. Okay, and that's here on gold. I do trade gold, so I'm going to set up an alert there, add an alert, crossing, oops, up every time. 4 hours supply zone. Okay, we'll set them over here as well. Proximal line here, add alert. Go in and edit this. Crossing down every time. 4 hour demand zone. Okay, all right. So looking for trades there. I mean, we do have unmitigated 4 hour here as well. So it doesn't necessarily mean that price has to come all the way back up here. But for zone's sake, let me just draw this out. All right, so this is definitely has definitely not been mitigated. We do have imbalance that needs to be filled. Okay, so again, we could see price do this, okay, and not even trade up here. Sorry guys. All right, and maybe target a Forex trade as well. All right, so definitely areas we can see this turn. Again, it could shoot up more and then and create another high and another low to be bouncing in between. But as far as what I see right here, this would be my initial analysis. We definitely have 4 hour unmitigated 4 hour zones here, but I will wait for this 4 hour zone to be invalidated and then look into possibly taking some lower trades out of this unmitigated institutional supply zone. Okay, same thing with silver. Short-term institutional bias is consolidation. Let's take a look at some sell and buy trades. Let's see. We do have this unmitigated 4 hour supply, as well as imbalance to be filled that we could definitely possibly see trades taken off there. We have imbalance that needs to be filled there. Here, let's just set up the zones really quick. We have unmitigated 4 hour demand, unmitigated 4 hour demand. Oh, this has been mitigated. Sorry, it was this one. Okay, as well as just a tiny bit of imbalance to be filled. All right, so I like this because more than likely this is probably sitting around the 78.6% retracement level. Let's take a look. All right, yeah, I like that one a lot. All right, so maybe look for longs in this area. Confirmation price action for a long in this area. We're consolidating, so maybe we'll just target Forex right here. Okay, maybe see that off of silver. I really don't trade silver, so I'm not going to put any alerts on this one. And then, of course, we have our short up here, which I don't like too much just because of the risk to reward is going to be kind of crazy here. Risking, let's make this Forex. Somewhere around here, okay. But I know you guys are sticking, so I'll just set it there. All right, so maybe look into the plays if you guys are trading silver. All right, U.S. oil. U.S. oil institutional bias is short. You guys know we have the war going on, or we don't have the war going on, but there's a war going on between Russia and Ukraine, which is affecting the U.S. oil. All right, I think is affecting the U.S. oil. We did come close to this institutional supply here. All right, let's look for reasons as to why we would, or areas rather, as to why we could go short, maybe coming short off of this unmitigated 4-hour supply. All right, as well as we have imbalance to be filled here. Okay, maybe that's short. We have an unmitigated 4-hour supply here. Okay, as well as imbalance, very small imbalance to be filled. Could go long here, all right. But again, the institutional bias is short. However, if we do go short, because this is unmitigated, because this is unmitigated, we could take, maybe our TP can be here. So I would love, let's see, so maybe looking for price to come off of this one, possibly take it to this unmitigated. Maybe we can take and look for shorts off of here. Again, you know, that would be nice to take that, but you know, you could target your, you know, your Forex. But here we'll target. I'll target that because I think it's gonna, because of the war and everything going on, I think it's gonna cause the price of crude oil to go down. So these are the areas for oil, okay, that I would be looking to take, and I do take these oil trades. So crossing up, looking for 4-hour supply zone. Oops. Hour supply zone. Okay, we have another crossing up 4-hour supply zone. Okay, and let's do one for this unmitigated demand. Now there is other unmitigated demand that could be developed as the week goes on, but we'll just take a look at that, okay, and just draw this out for you guys. Maybe take this and initially target 4x, but see what type of imbalance and highs the market creates for us to target. I did have it at 4.3, didn't I? No. We'll just do, okay, 4.3. All right, guys. Last but not least, the S&P 500 index. All right, or ETF. Short-term institutional bias is consolidation. We are coming out of this institutional supply, as well as coming out, well, I should say we're coming directly out of this institutional demand, maybe coming back. Let's see if we have any unmitigated 4-hour. Yeah, we have tons of unmitigated 4-hour that price could definitely come into. All right, let's grab this one. Unmitigated 4-hour. Okay. This imbalance has been filled, but we'll take this supply. Let's see, do we have any other unmitigated supply? Yes, I would consider this to be unmitigated. Price left it and has not come back to it yet. This is unmitigated as well. If I select the right tool, it's unmitigated doji. Okay, but I'm probably thinking this area right here. All right, because if we take our Fibonacci, again, me personally, I like that 78.6 zone. Okay. All right, so I could definitely see it touch into here. Taking out this has already been mitigated. So we may see this, maybe the 61.8, maybe this zone may be the ideal zone, which is like right here. But again, I want you guys to be careful because maybe let's target right here. I want you guys to be careful because I want you to wait for confirmation before getting into any of these trades. All right, so let's go add an alert every time crossing up 4 hours supply. 4 hour supply zone. Create that. All right. So maybe we see this play out, and I'll actually maybe target this imbalance right here, which would give us a 17x trade. All right, so guys, this has been the market analysis as well as some areas of interest for you guys to possibly take a look for confirmation to take these various trades. Let me take you guys to the Dixie, and let's pull this up and let's talk about the strategy a little bit for you guys that I have for you guys to trade. Let's see. Oh. I had it, guys. I had it all worked out for us. All right, so let's just take a look here. So this is I call it base supply and demand zone. All right, so this is basically based off of these different formations here. All right, so the first one, all right, we have 4 different price formations for our base supply and demand zones. All right, the first one is we have a drop base drop. All right, and we're looking for supplies or sales with these. And so once the drop base drop has been formed, we're looking for price to come back into the supply area off of the base and then take trades going down. The next one is the rally base drop. Again, we're looking for supplies and sales. So we see where price will rally up, base over, and then drop, or rally up, consolidate, and then drop. In this situation, we're looking for a price to come back into this supply area before taking sales. All right, and then for buys, we have 2 price formations that we're looking for. The first is the rally base rally. All right, we're looking for demand zones or areas to buy the market in. And so we essentially, once the rally base rally has been formed, we want to see price come back, mitigate the demand zone, and take our buy trades. Secondly, we have the drop base rally. All right, we're looking for price to come back down into this demand zone before taking price back up. All right, And so those are the formations that we look for. All right. Now let me show you guys how we look for these candles. Okay. All right. So with a supply candle, all right, with a supply candle, we're basically going to be looking for the last up candle before the down move. Okay. All right. And so the opening of the candle is our proximal line. All right. And the high of the bull candle is our distal line. Okay. Whenever we draw this out, we start from the high and we draw it down to the open. Okay. And you guys see how I pretty much have my Fibonacci set up for when I'm taking trades. Okay. I'm always looking to take, I prefer to take the 50%. Okay. I'm just going to bring this down. All right. And 120% of the move is typically my stop loss or just above it. All right. And TP1 is typically 0 at the 0 mark. So that's how I'm looking to take my trades. Again, we target Forex, or we target imbalance, or we target lows for these supply areas. Okay. Now our demand candle, all right, we're looking to take buys. So we're looking for the last bearish candle before the up move. Okay. The proximal line is going to be the open. The distal line is going to be the low. Okay. And just think about the distal is always going to have distance between it and price. All right. And the proximal is going to always be the closest to price. Okay. So for this demand candle, you would draw your again from the low to the open of that candle. And again, it doesn't always work out, but I like to try my best to take it at the 50%. Okay. With my stop being at the 120% of the Fibonacci I created. And you can always look for partial at the 0%. And you guys have seen I haven't actually did a video on it, but my Fibonacci trading. Okay. These are basically my entries: 50%, 61.8%, 78.6%, even 100 sometimes. All right. And then these are my TPs: 0%, -27, -61, and -100. All right. So I just want to share that little bit of information with you guys to help out. I may just do another video where I'm spending a little bit more time. I just kind of want to throw that into this market forecast, just to also give you guys some further knowledge on how it is I'm looking for these zones. If you found this video helpful, if you're not a subscriber, please subscribe. Please give me a thumbs up on this video. If you did not find it helpful, thumbs down. As a matter of fact, hit thumbs down twice to really let me know how you feel. And everyone, please comment below. Let me know what you think. All right, guys, until next time, always remember, if you stay in God, you will stay in control. Until next time, happy pip fishing, and always, always, always wait for confirmation. All right, guys, take it easy. Bye-bye.